Application of blockchain in business. In recent years, blockchain technology has become the bone of contention in most debates across various industries regarding the benefits businesses can draw from this innovation. Most people often assume that the benefits associated with this technology are limited to cryptocurrency alone. However, this is a big misconception because blockchain technology actually portends several benefits for different sectors. Blockchain technology offers businesses secure, transparent, and efficient ways to manage transactions and data. Various business sectors are utilizing blockchain to improve various business processes, for example, from electronic payment systems to supply chain management. In industries like finance, blockchain improves security and reduces fraud risks with smart contracts and decentralized ledger systems. For e-commerce businesses, it ensures transparency in transactions and product provenance. By integrating blockchain technology with other technologies like IoT and AI, businesses can enhance trust, traceability, and operational efficiency. Understanding how blockchain technology works in business. Firstly, it is vital to acknowledge that before the invention of blockchain technology, both securing and validating the ownership of a digital asset, or even verifying a transaction in a trustless public way, was non-existent. Consider the act of using a software license to gain access to a program like Microsoft Outlook. To apply the privilege to use the software, a verification must be done by a central server controlled by Microsoft. Alternatively, let us consider an individual seeking to transfer possession of valuable property, such as owning a significant amount of shares in a firm or a treasured exotic piece of digital artwork. In this scenario, transference of share ownership would require loads of documentation, an attorney, as well as a centralized trusted agency such as the London Stock Exchange. Based on these real-life examples, it is evident that blockchain is the first technological advancement that makes it possible to hand over digital rights in a decentralized way without the need for a trust-based interaction. Characteristics of businesses likely to benefit from blockchain technology. Although technology and supporting platforms around the blockchain ecosystem will continue to undergo development, the profiles of businesses that are likely to benefit from its initial real-world adoption comprise transaction-based businesses, businesses that benefit from public scrutiny, businesses that rely on history that cannot be altered, businesses driven by a model where decentralization serves the best interests of the consumer. Blockchain benefits for businesses. The potential gains businesses can make from adopting this technology are broad. However, the leading ones are secure payments and transfers, easy tracking, mistake-free accounts, and smart contracts. Secure payments and transfers. The foundation of blockchain technology is to secure and ease the transfer as well as receipt of payments. Therefore, businesses will be guaranteed to send money both directly and instantly to anyone across the globe. However, the primary advantage of using this technology is the fact that it will be less expensive to do so. Primarily, this technology eliminates intermediaries such as banks, which translates to the elimination of charges associated with transaction remittances. Easy tracking. For supply chain management, blockchain technology makes it possible to track your commodities at any given instance. This technology gives you complete information and quantity of the commodity throughout its life, in addition to allowing you to trace goods from the point of manufacture to the final transaction. What this means for businesses is that consumers can develop greater trust in an enterprise due to increased transparency in the supply chain process. Furthermore, ownership transfers, quality assurance, as well as payments will be easy and straightforward. Mistake-free accounts. Blockchain technology can document all kinds of transactions. For businesses, this means that the maintenance of error-free accounts is possible because the information is not subject to human mistakes or alteration. This aspect is made possible by the fact that each sale is verified any time it moves from one node to the next. For this reason, auditing services will not be necessary because the recording transaction will have a traceable audit trail. Furthermore, companies will not be obliged to maintain separate accounts because this technology offers a single joint ledger. Smart contracts. For businesses focused on achieving growth, time-consuming contracts are big head-scratchers. However, with blockchain technology, smart contracts will be a reality, and businesses can only enjoy the benefits once it is adopted. Firstly, the contracts and agreements will be authenticated automatically. Secondly, enforcement and signing of contracts will also be done through this technology. The benefit of this aspect is that it is both time and cost efficient due to the elimination of intermediaries in the contract negotiation process. The implementation of blockchain in various sectors. Blockchain is not merely a technology beneficial to logistics. It can also be applied across a wide range of sectors, including banking, healthcare, real estate, manufacturing, and even government. Several sectors have already adopted blockchain technology in practical applications, including 1. Logistics and supply chain. Blockchain enhances transparency and trust by enabling real-time tracking of goods movement. Once recorded, data cannot be altered, thus improving security and efficiency. 2. Banking and finance. Blockchain facilitates faster and more secure cross-border payments. Additionally, smart contracts automate various financial transactions, reducing operational costs. 3. Healthcare. Blockchain is employed to store encrypted patient medical records, which can be accessed only with appropriate authorization, thereby improving privacy and minimizing data theft risks. 4. Manufacturing. Blockchain enables accurate recording of production and raw material distribution transactions, simplifying audits and reducing production errors. 5. Government and digital identity. This technology can be utilized in electronic voting, e-voting systems, digital identity storage, and more secure and transparent document verification. Case study: blockchain implementation in banking. In the banking sector, blockchain has been adopted in various aspects. One key application is in payment and remittance systems, which enable faster and cheaper cross-border transactions compared to traditional banking systems. For instance, Ripple, XRP, has been utilized by major banks to expedite international transactions and reduce intermediary costs. Furthermore, the use of stablecoins such as USDC and USDT provides a more stable blockchain-based transaction alternative compared to other cryptocurrencies. Blockchain is also applied in Know Your Customer and digital identity systems. Through this technology, customer data can be securely stored in a decentralized system and accessed by multiple financial institutions without requiring repetitive verification. This implementation helps banks reduce operational costs and accelerate customer onboarding processes. A notable example is the self-sovereign identity concept, which allows individuals to maintain full control over their identity data without relying on centralized service providers. In the credit and lending sector, blockchain enables the automation of loan approval processes, data validation, and fund disbursement through smart contracts. This reduces fraud risks while enhancing operational efficiency. Blockchain-based platforms such as Aave and Compound provide lending services without traditional intermediaries. Regarding stock trading and financial assets, blockchain allows transactions to be conducted without intermediaries such as brokers or clearinghouses. This technology shortens the settlement process from several days to near real time. The Australian Securities Exchange, ASX, has adopted blockchain for stock transaction settlements to improve efficiency and transparency. From a security and anti-fraud perspective, blockchain offers protection against cyber attacks and data manipulation through an immutable ledger technology. Each transaction recorded on the blockchain can be verified by all nodes in the network, reducing data forgery and fraud risks. For example, IBM TrustChain assists banks and financial institutions in detecting suspicious financial activities more accurately. Notable banking implementations of blockchain. J.P. Morgan Chase. J.P. Morgan Chase, one of the world's largest banks, developed JPM Coin, a blockchain-based stablecoin for inter-institutional financial transactions. This innovation aims to facilitate instant payments among the bank's institutional clients, making transactions faster and more efficient compared to traditional methods such as SWIFT. Santander Bank. Banco Santander has implemented blockchain through OnePay FX, a remittance service powered by Ripple, XRP, enabling cross-border money transfers within seconds. This technology has been adopted by customers in various European and Latin American countries, reducing costs and improving international transaction efficiency. HSBC. HSBC utilizes blockchain in its digital vault system to securely store digital investment documents. This innovation aims to reduce reliance on paper-based processes while enhancing investment data accessibility. By leveraging blockchain, HSBC enhances transparency and security in recording asset ownership and high-value investment documents. Deutsche Bank and R3 Corda. Deutsche Bank collaborates with the blockchain platform R3 Corda to enhance efficiency in international trade transactions. This implementation reduces reliance on manual processes in global trade, making transactions faster, more transparent, and less error-prone. Global challenges in banking. Despite its numerous advantages, blockchain faces several challenges before achieving widespread adoption in the banking sector. One primary challenge is regulation, as many countries have yet to establish clear regulatory frameworks for blockchain usage in financial systems. Additionally, many banks still rely on legacy systems that are difficult to integrate with blockchain technology. Another challenge is transaction speed, as some public blockchains have scalability limitations that may slow down processing times when user volumes increase significantly. Data privacy is also a key concern, as blockchain's transparency must be balanced with appropriate protections for customer data in compliance with regulations such as GDPR or data protection laws. Blockchain continues to evolve, and overcoming these challenges will be crucial in unlocking its full potential in the banking sector and beyond.
Yes, chill on
Feel
the
okay?
top.
Feeling good?
Okay, chill on the top.
Yes.